Hello and welcome back to my channel, Richard Tang, CEO of Zen Internet. A few weeks ago, Neil MacArthur was interviewing me and I was sat on the other side of this little circular thing. But today, I'm back in my interviewer seat. I have with me today Matthew Hare, former Chief Executive of and founder of Gigaclear, and now the founder and Chief Executive of Zzoomm. Very warm welcome to Zen.
Thank you so much. It's great to be back.
Yeah,
nice to see you, Richard.
Yeah, great to see you. Zzoomm is spelled ZZOOM, so
Perfect.
not to be confused with the video conference company. Let's dive in with a tricky question, Matt, which is you started off with a big aspiration, 1 million build. You've got to 200,000, which is super impressive. But now you've stopped all build. You've had a couple of round of redundancies. What's going on?
Well, so the stopping the build is all about availability of capital. It's not about availability of opportunity or aspiration. So for me, I think 1 million is still a good target to get to as a footprint, and probably even a bigger number. So the question for me is how are we going to get there? And if we can't build it ourselves, we'll have to find another way of getting there.
Oh.
So the aspiration is absolutely still there, Richard.
Okay. So still 1 million plus is still
1 million plus is still the plan.
Aspiration.
Yeah.
Okay. And if you're not,
but when I started Zzoomm in 2018, there's no way I thought there'd be 40 or 50 people building fibre in the UK. At that point, I think there were 6 or 7 of us. 6 or 7, including Gigaclear, and so if you. And I'm not a fan of Overbuild, which I'm sure we'll talk about at some point in the future. So, the opportunity is still how do you get there, but get there without overbuilding other people. And if you can't build it yourself, I think you're going to have to buy it.
Yeah. Okay. So that sounds like you're on the acquisition trail.
Absolutely are.
And can we expect anything? Can you let anything slip in this interview about what
definitely
might happen
can't let anything slip at all? No. But
okay.
yeah, no, very, very, very active, and we've been in the press about it a few times. Not at our aspiration, but other people have leaked things that we've been working on. But it's a we are very much a believer in you need to have a big fibre footprint to have a good viable business. That gives great returns to shareholders, and that's how do you get there is the question, not should you get there.
Yeah,
I mean, in the bit of the market that we're in, I think other bits of the market maybe you can have a different view and a different approach, but we're in market towns. There's about 4.2 million properties in the UK in market towns, so the question is how much of that can you get into a single company and have a single footprint.
Mm-hmm. I've talked a lot about the big consolidation in the various interviews I've done. There's lots of talk in the industry about it. One of the questions that I posed to a couple of audiences is when we get to 2030, how many scale full fibre players will there be left in the market? So if I were to put you on the spot on that one, what would your answer be?
Well, I would say there'd probably be between 5 and 10 scale players.
Okay.
And that really depends on how quickly the consolidation happens. At the moment, the sort of consolidation that's going on is going to be share for share style consolidation, i.e., 2 companies get together, the shareholders swap the shares they've got in those businesses for shares they've got in a new business that controls them. And that's, absolutely fine. But doing those deals is much more challenging than someone just coming in with a big check and saying, Richard, I'll buy your business for £10. When you can just make the decision, do I want to sell at £10 or not?
Yeah.
And that's dependent much more on the debt markets, because if you look historically at how telecoms companies have built themselves up through acquisition, it's not principally equity funded, it's principally debt funded. And right now, the debt markets are still bluntly completely constipated. So we're still, I think, probably maybe another year away from seeing some more opportunity to raise debt in order to buy assets.
Yeah, because at the moment you've got 100 million of debt, 100 million of equity, I believe, and some money of your own.
We've got a bit more than that, but yes, exactly. Yeah, we've got about 224 million of capital in the business at the moment in total.
Okay.
of which 100 million is debt from 3 banks, and we have 12 million from private investors, including myself, and then the balance is from Oaktree, who's our principal investor.
Yeah. And if you go on the ISP review, it said 1 million has come from you.
No, I put a lot more than a million.
A lot more than a million.
Yeah.
So how much have you put in?
Well, I'd rather not say, but
well, it's a chunk of that 12 million.
Yeah, a big chunk of that 12 million.
Oh, a big chunk of the 12. Yeah. Okay, let's go back to the consolidation. Imagine 2030. So what's that now? 5.5 years time. Let's say you're right, 5 to 10 scale players. Where do you see Zzoomm? Do you see Zzoomm as being acquired by a bigger entity, or do you see yourselves get into that million plus premises and
beyond
the acquirer?
Yeah. So I think it's yes, we certainly have the aspiration to be the one driving it, but I think the shareholder base, if you can imagine, we've done 3 or 4 deals over the next 3 years. The shareholder base that we have at the moment is going to be very different to where we are there. So Zzoomm might still be the name of the company, the brand, either consumer or network-based brand, but actually the shareholder base is going to be very different.
Mm-hmm. Next question is about retail and wholesale. So at the moment, Zzoomm does the whole thing, end-to-end, retail and wholesale. What are your plans for the future?
So taking a step back, why are we a vertically integrated business doing retail and wholesale in the same business? It's because actually when you have a small wholesale network, getting anybody to spend any type of serious time actually selling on your network is I personally think very, very, very difficult. Mm-hmm. I won't say impossible because maybe someone will do it, but I think very, very difficult. So our view from day one was, we want to have a network that other people can use, because why encourage them to overbuild us? I mean, that's just bonkers. But we only want to do that at the point where we can attract onto our network scale retailers. So how big does our network need to be before you can attract Zen and companies that are your size and bigger to actually want to sell on our network? Well, I put to you that 200,000 where we are at the moment, or 201,000, isn't big enough. You may tell me something different, but I think that's probably not big enough. But is 500,000 big enough? Do you need to get all the way to 3 million, which gives you 10% of the UK properties? Do you need to be that size before you can attract the scale players, or does it need to be even bigger? Do you need to be 6 million or 10 million? Yeah. So that's, I think, the key thing. I mean, you want to go and do third-party selling on your network when they're going to do something that's actually additive to the business and not just substitute for what you're going to do anyway.
Yeah. And I guess on that question of would Zen do a partnership deal with a network that's got a 200k footprint? Possibly. We quite possibly would.
But that's probably the minimum size we would need to be, I would have thought. If I come to you with 100,000 properties, I mean, I can't see. I mean, we did, we can do the maths. It probably means if we had 100,000 properties, you might only have 500 customers that you might be able to move across. Yes, you might then start selling on the network, but that's kind of, for it to be a big win for us, we really need to have people who are actually bringing their existing customers across as opposed to just selling on the network.
Yeah, well, absolutely. And there is a minimum scale. And I remember when we had a chat back in your Gigaclear days,
exactly,
right here in Rochdale. And I can't remember what the footprint was back then. Maybe it was 20,000 or something like that, 25,000. And we did the maths and we were like, really, we could do all this effort to integrate, to set up all the relationships. How many customers would we actually get reasonably? And the maths just didn't work. So there is a minimum scale. Without any doubt. And so I guess what you're saying is you have to build a retail ISP whether you want to or not. Otherwise,
because having an asset that doesn't generate revenue is completely pointless. And unfortunately, our industry has lost quite a few chief executives in the last year of people who'd built assets without having any revenue on the back of it. And that's just not, you can't sustain your job if that's what you do, because just building the asset isn't the end game. The end game is getting a return on the asset. And for that, you need, lots and lots of happy customers paying every month without any quibbles.
Absolutely. And what about longer term then? So CityFibre have been very clear about this when they acquired LitFibre. They said, look, we're a wholesale ISP. This isn't in our strategy. And their press release after the acquisition made it pretty clear that they wanted to offload the LitFibre retail base and focus all on wholesale. And I guess from Zzoom's perspective, what's your long-term ambition? Will you continue to be vertically integrated, or is there a point and a scale of your network that, let's say, when you get to 1 million, where you're going to know actually our strategy is wholesale only? We need to go give the retail base to someone else.
Well, you might. I mean, we certainly wouldn't give it to anybody else, obviously.
Yeah.
But you might sell it to somebody else, or you might just run it as a completely separate company. I mean, the mobile companies all used to have their own retail subsidiaries before they got the rules changed and were allowed to own them again.
Yeah.
So back in the 80s, 90s. I know it's a long time ago for some people, but
I remember.
Me too. So exactly, yeah. So I mean, I think the opportunities are there, and ultimately, it's about the type of capital that actually wants to invest in those assets. The same argument that people have been making about BT Group, for example, is that you've got a bunch of BT public market investors who are really interested in the Openreach network asset. And then another bunch of their investors who are interested in their retail businesses and the fact they make big margins on their retail business. If you split those apart, would you attract different shareholders who valued each of those bits at a higher level and therefore generated more value for shareholders? And if you look at Denmark, I think you'd say the answer is absolutely yes. When they split the business into the wholesale business and the retail business, the shareholders made out like bandits because the value of the both businesses was much greater than the value of them together.
Let's talk about market penetration. You've got just over 200,000 properties passed.
Ready for service.
Ready for service.
Ready for service.
Oh, yeah, there is a big difference.
There is a big difference.
So ready for service.
Yep.
Sorry.
So ready for service means I can take an order today on my website or on the phone or from a sales guy, and we can install it tomorrow. There's nothing that needs to happen.
Like one day.
Or even we do same day installs for some people.
Wow. Okay. So just over 200,000 ready for service.
Yep.
How many paying customers do you have?
Well, we're just under 30,000. I mean, I don't know when this podcast is going to go out, but at some point in August, we'll hit the 30,000 number.
Okay, so 30,000, 15% market penetration, which is pretty good. I think pretty good.
And if you look at the towns we've been live in longest, we're now over 35%. You look at the cohorts we've been in longest, we're over 40%. So, the opportunity really is there to drive take up if you just keep at it every day.
And what's the magic number in your business plan that says this is the number we need to get to on our network? Then the business model works, the investors get their payback over the time scale that they expected. The business is valued based on
right.
The business model.
I think it comes down to two things. I mean, you've got the sort of the day-to-day costs of running your business. You then got your cost of expanding your business, and there's two bits to that. So there's building, and then there's commercializing. So obviously we've just taken off the build bit. So we're now just doing the commercializing and running. Because we're trying to add customers as quickly as we can, we're spending much more on the commercialization bit than we could if we just wanted to run the business to make money. And then the other big cost you've got in our business, because we've got debt in the business, is then the cost of servicing the debt that we have. So for us, if we wanted to just dial back the commercialization, we could be EBITDA profitable today. We don't want to be EBITDA profitable today. We want to actually generate a bigger return for our shareholders. So that means firstly, we need to generate additional revenues to cover the interest payments. And then above and beyond that, what the money you make after that is the money then that starts to give a return to the capital that's been put in the ground by the equity shareholders.
Okay, so in terms of market penetration, because different altnets, I mean, the lowest is Jeremy with his 13%. I can break even at 13%.
But again, you need to kind of do the same analysis that I just did then.
Yeah.
Look at the different bits that you're trying to achieve. He has got a very low cost of build, much lower than us. We've got, compared to him, higher penetration and higher ARPU. So we've got better, a better revenue side to the equation. So we need to have a higher level of penetration than he does to give the returns that I would like to deliver to my shareholders. And of course, he was talking about what level he breaks even at, as opposed to what level he gives the returns that shareholders want to get, which isn't the same thing.
Yeah.
So no, bluntly, I want to be in the high 20% penetrations on average to get to start to get the returns that my shareholders want to see.
Okay. Overbuild.
Yeah, I'm really not a fan. We don't do it. I mean, we've maybe overbuilt by accident, maybe a couple of hundred properties of other Alt-Nets. We have about half of our network where we're competing directly with Openreach, and about another 10% where now somebody else has come in and built over the network that we've already put there. So we're about 60% of the networks that we built where there's one other fibre operator in the same place. 40%, we're still the only full fibre operator. So, and that helps generate the returns you want to do. And I think we're a long way away from where they are in Spain now, where the cost to build is so low because they've got all these big fat empty ducts that the EU very kindly paid to put in. That's our taxpayers' money, obviously, that went to pay for that. But then and they have a very, very low cost of the equivalent of PIA. And you can literally build a city in Spain for less than €100 per property ready for service.
Wow.
So that means that they have a whole strategy in Spain where people will go in, they'll buy capacity on someone else's network, send their sales guys out, get customers. They'll hit 6 or 7%, even 8%. Then they go, okay, now pays me to build my own network in that city and just move those customers onto my own infrastructure, because every customer I add beyond that is just profit.
I think there's a just about all the Alt-Nets that I speak to are exactly the same as you. They don't like overbuild. They like the competition to be as limited as possible. But then you've got Openreach building 1 million premises every quarter. You've got VMO2 and nexfibre with very big ambitions and pretty deep pockets as well. I mean, what's your feeling about, I guess, the threat to Zzoomm from Openreach and VMO2 and nexfibre, and I guess the wider industry perspective as well, because I guess it will be different for different Alt-Nets.
Yeah, so we've been overbuilt by 2 other Alt-Nets in Sandhurst and Crowthorne. We're already at 20% penetration there. How on earth are they ever going to make money? I mean, I assume that they've decided that they're going to make money regardless, but we're in a really good position there. We're still adding, loads of customers every month on those networks, and our service is very sticky. You can get a very fast service from our retail business at a very competitive price in the market. I mean, literally sort of 25% discount against what the equivalent BT retail price is, with a symmetric service as well, as opposed to an asymmetric one that they offer. And we can offer you next day install. And if you have a problem, one of our engineers will turn up within 24 hours. I mean, clearly, if it's your own network, if it's your fault on the customer's premises side, you have to pay for the visit. But sort of the level of service and attention to detail that Openreach finds very difficult to deliver at the moment, although I believe they should. Openreach should be offering next day installs. They should be offering next day on-site service. That's just the world we live in today, but they don't offer it today.
There you go, Clive, if you're listening.
I'm sure he will at some point. and of course, logistically, it's very difficult for them to do it. But bluntly, that's where they need to get to, and because that is where their competitors are at. I mean, we might be slightly better than some of the others out there, but actually that's the aspiration for all of the new network operators is to give a much better value proposition. And the service wrap is really important, because it's what happens when something goes wrong where people really measure you. And if it goes wrong and you fix it really quickly and you do a great job at fixing it, they then do say to their neighbour, yeah, you really should look at these guys.
And the two altnets that have overbuilt you in Sandhurst, I mean,
Yeah.
did they do that knowingly then? They knew you were already there and they still decided.
Oh, for sure, they knew we were already there. I mean, I think it's impossible not to see. I mean, all our ducting is bright pink. I mean, it's impossible not to see it.
Yeah. Actually, a lot of the stuff you do is bright pink.
It is, yeah. It is magenta, we like to say. But
magenta.
Bright pink, yeah. It's magenta. So they must, they did know it. And to be fair, in both cases, I wrote to the executives on their boards to say, your people have started building here. It's very surprising. If you want access to our network, please come and talk to us.
Yeah.
We even have spare duct space. We could perhaps rent you some. And they were going, oh, no, we've been told we're not doing that by our teams.
Yeah.
So I think there's a governance and control issue, perhaps historically in some of these businesses, where they've gone and done stuff that, partly it's to do with decision timeframes. If you're going to build that town, you might have actually made the decision to build there 9 months beforehand.
Yeah.
But honestly, I think we've descoped about 265,000 properties from our build plans, because as someone else goes and builds there, we just go, right, Skipton, someone else is building, right, off the list. We're not going to do it. The fact that we've already spent £70,000 to, it's better not to spend the next £600,000 or £700,000 and write off the 70,000 and go, oh, well, don't worry, we'll beat them. We'll beat them.
Yeah.
Oh, yeah. It means you're going to share the market with someone, so you're going to get half the take up you otherwise would.
Yeah. Nice place, Skipton.
It looked really good for us. I mean, the demographics looked good and everything else. I mean, we were and we had spent £70,000 or £80,000, planning it and putting our cabinets out and everything else. But bluntly, if someone else is building there, we're just not going to do it.
Yeah. Just jumping back to wholesale then, it sounds like if an ISP like Zen or Vodafone, TalkTalk, Sky wanted to onboard your network, is that something that we could do next week? Or
no, it's definitely not next week. Because
year?
I mean, bluntly, we would expect it to probably take 6 months.
Okay.
Because by the time we've agreed how our systems are going to accommodate your systems, I think the commercials are pretty easy. Yeah. I think, frankly, you could agree within a week. I think it's all the detail of actually how to then make it work seamlessly. Because, I understand other people have, for example, gone live with a offering to retailers where you end up having to type everything into a portal manually. Mm-hmm. That might not be the most attractive thing either from your side or from our side as a network. So we would aim to have an automated system from day one. And frankly, with one-touch switching, I'm not sure you could actually do it with a manual system anymore anyway.
Well,
that might make it very difficult.
Yeah, absolutely not. So 6 months away minimum to I guess, get a wholesale service ready.
Yeah, I mean, we use NetAdmin as our OSS BSS. It's designed from the beginning to have multi-led, but agreeing the messages, doing the testing, agreeing the how we're going to make the service wrap work. If it was a Zen customer, do you want the installer to have a Zen bib on?
Yeah.
Do you want the installer to bring the router and test the router, or are you going to send the router in the post? So a lot of those sort of little nitty-gritty operational bits that frankly, to have a great customer experience, you want to have nailed. Yeah. And clearly we do it ourselves now. So it's not like we need to work out what to do. It's a question, okay, here's all the things we do at the moment. Which of them are you going to want us to do for you? How do we make sure that's automatic? And if there's a problem, what does your NOC do to ours? What does your system do to ours? All those things.
You mentioned one-touch switching, and one of the we've done a ton of work on one-touch switching. I think we're ahead of the curve compared to the average in the industry. For a lot of the smaller ISPs, and I guess the vertically integrated retail ISPs of altnets, one-touch switching, it's a huge amount of work. And as you say, it's not something that you can get by with manual workarounds, because you need that responsiveness automatically. And
so I'm delighted to say we passed our testing last Friday.
Oh, well done!
So we're ready to go.
Yeah.
We've got a really strong software team, a really good networking team. In fact, many of our networking team used to work for you, Richard.
Yeah, they did. They did.
And really, really very good guys.
You've got some of our really good guys.
Really good guys, yeah. So, I think we're in a good
Elliot
place.
Dave.
Rich, Elliot, and Dave, exactly.
Yeah. Oh, you're enjoying it.
So I think for one-touch switching, we're in a pretty good place. I mean, I still am quite worried about the potential for bad actors to cause an awful lot of damage to the UK telecoms industry by abusing one-touch switching.
What about interest rates? Because when you started Zzoomm, interest rates were very low. I don't think anyone anticipated what would happen. And I just get this feeling that in the altnet world, as the interest rates have shot up, the amount of pressure on the business models of the altnets has really increased. Just wondered how it's felt being on the receiving end of that.
Very true. We borrowed our 100 million at SONIA plus 5%. So, or 500 bips, I think the finance people do, but 5% amongst us normals. And it's and clearly, interest rates going from sort of 0.25% when we borrowed the money to near, just under 5% now has meant that the cost of our debt in terms of interest payments has basically doubled over the same period. So instead of us having to effectively find £450,000 a month to pay the interest bill, we now have to find £900,000 a month. Well, so that's £450,000 I can't spend on something else, either winning customers or building network.
Yeah.
So from a cash point of view, it's pretty straightforward. From a equity returns point of view, clearly if you've got the same cake and you've got to give more of it to the banks because it's costing you more, there's less of it for the equity shareholders.
Yeah, and I guess that's been a factor in stopping your build, or is that just the availability?
No, so if we could continue to borrow at essentially 10%, we would continue to borrow at 10%. So, which is, we're a bit less than that at the moment, but that sort of number. Okay. So it's more availability of capital at the moment. The big reason that capital isn't readily available in our sector at the moment is you have a huge amount of debt was taken on by two very large altnets, so nexfibre and CityFibre. So many banks have essentially filled their loan book with those big loans there, and therefore don't have smaller amounts available in the same country, in the same sector, if that makes sense. It's about sort of a risk profile from their point of view. We've already got the £1 billion we want to allocate to UK fibre. It's already out there and allocated. Therefore, the fact that we want to, somebody wants to borrow more money, even if the business case is good, well, we've got enough risk in that particular part of the UK market.
Yeah. Last question, rural broadband. And this is...
I love it. I live in a rural area. I absolutely adore it. I'm very lucky to have Gigaclear in my home. Chris, who's just sitting over there, he's also a Gigaclear customer. And if we didn't have Gigaclear, we would be on absolutely useless copper. I would have put Starlink in at home for sure.
Right.
Because when you can't get fibre, Starlink actually is pretty good.
Yeah.
But if you can get fibre, why would you bother?
Yeah, exactly. And so many stories like that of people who've been transformed for getting full fibre. And one of our consumer customers that I was in touch with for several years to try and get him full fibre at home, he finally got it, and it was absolutely wonderful. He went from about half a meg ADSL to... And
when I started Gigaclear all those years ago, back in 2010, that was the opportunity we were trying to seize. Was the people for whom copper just really didn't work, and although it's expensive, it's really much more expensive to build in rural than it is in urban. But even though it's much more expensive, you go, well, actually, you're really solving a 50-year problem for those people, whereas opposed to in urban, you're solving a 5-year problem. So it's really the opportunity in rural, I think, for full fibre is absolutely fantastic. So I really wish all those full fibre rural players the best of luck. Stick to your plan, keep going. Keep your costs under control, make sure you deliver great customer service, because you will win almost everybody in those communities over time onto your networks.
That's fantastic. And I have got a very similar feeling. They've done a great job, the rural players. I want them to survive long term.
Yeah.
The question is, with the backdrop of Openreach in particular saying we will build it everywhere, and even when they've got to their 25 million premises goal, they will continue to build at 1 million a year until they're built everywhere.
So you've got two different bits of, well, you've probably got three different views in BT. You've got BT Retail, who've got all these customers and they want to continue serving them. Okay, so they've got two choices. Either they buy infrastructure from Openreach or they buy infrastructure from someone else. At the moment, they're not allowed to buy infrastructure from anyone else, so they have to get it from Openreach. You've got the Openreach guys who, of course, want to have the biggest possible asset they can have. And then you've got the BT Finance people who are going, well, where are we going to get a return on our capital? You know, if we're going to put 5 million into CapEx next year, and we've got all these different places to put it, you know, the fibre network, the enterprise network, the mobile network, international, you know, anything else that they can think of. And they go, well, okay, how should we allocate that capital next year in order to get the best return for our shareholders? And at the moment, they go, well, we've got to invest in Openreach because Openreach, we've got to make sure they're the biggest network operator in the UK, although otherwise we're going to lose our position. And all those arguments we made for decades about how copper's fine and we can keep making copper faster and faster, we have now accepted that those arguments turned out not to be correct, and we have to have a all fibre network if we're going to be, you know, a national scale relevant business in the future. But then you still got the finance guys going, okay, yeah, so you've got to 25 million. There's now 33 million because there's a few years in the future. Assume that we're actually going to build houses a bit quicker in the future than we have been building, perhaps. So it's 33 million properties. Well, actually, how many of those new properties does it make sense to build? Okay, all the ones on the new housing estates, absolutely. No problem. You've got your business case signed off to do those, no problem at all.
Yeah.
But still going to those weird little rural hamlets that are, you know, 4 miles away from our nearest bit of fibre at the moment, and we're only going to get 120 properties when we get there. Oh, and by the way, some other Alt-Net's already gone and built them. So BT Retail goes, well, we've only got 16 customers left there anyway. Well, I think the business case looks very different. It might, you know, I would probably, if I was at Openreach, also be saying, don't worry, we're going to do it all. Apart from the else, they want to turn off the whole copper network. And it makes it much easier to say if we've got an all fibre network. But at some point, I think they'll say, well, no, I'm afraid all those guys now we haven't done, however many million that ends up being. Actually, we can either offer you a satellite-based service or we can offer you a fixed wireless service based on EE. But actually, the copper's going to be turned off anyway.
Yeah. So I think the message is, which I love this, is that actually the economics for BT mean that there will be these pockets where if the rural players continue to focus, they'll end up with the majority of the customers and they'll have a long-term business model they can
and don't forget, a lot of the people who've done rural have done it using subsidy, so they have a mandatory wholesale requirement. And at some point I think BT Retail will go, okay, so it doesn't make sense for us to actually get Openreach to build these. We still want to keep the customers. Right now, make an offer to all these Alt-Nets. Here's one offer. This is the basis on which we want to buy wholesale access from you.
Really?
Yeah. And this is the spec, and here's the technical spec, and that's what you got to integrate to. And as long as you do that, you know, we'll move our customers onto your network. And if you don't do that,
okay. Well, I love that bright picture to finish on for the rural players because, like you, I think they do a fantastic job.
Yeah, and you don't have to have an enormous number of staff to make a rural business viable. I think it's the question is, you know, and if you basically mostly build it using subsidy, then actually to get a sensible return to shareholders, you don't have to generate that much profit off it.
Yeah, brilliant. So the future is bright for those
lovely
rural players. Fantastic. Matthew, it's been an absolute pleasure. Thank you very much.
Fun as always. Thanks very much.
And thank you very much for watching.